Today, Bitcoin price may hit $100K by year-end, Standard Chartered Bank says. Ethereum Shanghai upgrade brings record inflow of 572K ETH staked in a week. Bitcoin drops to $27,300. Ether edges toward $1,800 amid investors' interest rate concerns. House Republicans make case on stablecoin. Bill after Democrats called for do-over. Bitcoin price may hit $100K by year-end, Standard Chartered Bank says. A report from the firm noted that the crypto winter is finally over, and Bitcoin halving is set to be a positive catalyst for the price. Crypto winter is finally over, and Bitcoin, BTC, the world's largest cryptocurrency, has the potential to reach $100,000 by year-end, according to a research report by Standard Chartered Bank. The climb to $100,000 could be driven by a number of factors, including the recent banking sector crisis that helped to re-establish Bitcoin's use as a decentralized, scarce digital asset, the bank said in the report on Monday. Against this backdrop, Bitcoin has benefited from its status as a branded safe haven, a perceived relative store of value, and a means of remittance, analyst Jeff Kendrick wrote. Bitcoin has gained 65% since the start of the year. It rose above $30,000 last week, for the first time in almost a year. It was recently trading at $27,328, down 1.2% in the past 24 hours. Crypto winter is finally over, and Bitcoin, BTC, the world's largest cryptocurrency, has the potential to reach $100,000 by year-end, according to a research report by Standard Chartered Bank. The climb to $100,000 could be driven by a number of factors, including the recent banking sector crisis that helped to re-establish Bitcoin's use as a decentralized, scarce digital asset, the bank said in the report on Monday. Against this backdrop, Bitcoin has benefited from its status as a branded safe haven, a perceived relative store of value, and a means of remittance, analyst Jeff Kendrick wrote. Bitcoin has gained 65% since the start of the year. It rose above $30,000 last week for the first time in almost a year. It was recently trading at $27,328, down 1.2% in the past 24 hours. The report also noted one of the drivers for the price to reach $100.00 is the broader macro backdrop for risky assets gradually improving as the Federal Reserve nears the end of its tightening cycle. While BTC can trade well when risky assets suffer, correlations to the Nasdaq suggest that it should trade better if risky assets improve broadly, Kendrick said. Standard Chartered expects Bitcoin's share of the entire crypto market capitalization to rise back to the 50–60% range. The Bitcoin dominance rate is now around 47%, according to data from TradingView. It was around 40% during the fallout of Silicon Valley Bank in mid-March. Bitcoin's upcoming halving, the process whereby the rewards for mining a new block gets halved every 4 years, is also poised to be a positive driver for Bitcoin, Kendrick wrote. As we approach the next halving, we expect cyclical drivers to become more constructive, as they have in previous cycles, he said. Ethereum Shanghai upgrade brings record inflow of 572K ETH staked in a week. The influx into ETH staking was mainly driven by deposits from institutional staking platforms and reinvesting rewards, crypto analysts said. Ethereum's Shanghai upgrade brought a record-breaking weekly inflow of ETH deposits for staking last week, mainly driven by institutional staking service providers and investors reinvesting rewards after withdrawal, crypto analysts said. Investors deposited some 571,950 ETH tokens into staking contracts, worth more than $1 billion, according to a Dune Analytics data dashboard created by Tom Wan, an analyst of digital asset investment firm 21 Shares. This was the largest weekly token inflow in Ether staking's almost 2.5-year history, per blockchain data provided by 21 Shares. The Ethereum blockchain completed its highly anticipated tech upgrade, often called Shanghai or Shapella, on April 12th. The initiative enabled the withdrawal of tokens previously locked up in staking contracts for the first time. It was the last key step after last year's merge to complete the network's transition to validating transactions through staking from a mining-based system. ETH, the network's native token and the second largest cryptocurrency by market capitalization after Bitcoin, BTC, surged following the successful implementation of the upgrade, but relinquished all its gains last week in a broader crypto market sell-off, caused mostly by macroeconomic concerns about inflation and a looming recession. Institutional ETH staking services drove the deposit surge in ETH staking, Yuan tweeted. Since the Shanghai upgrade went live, the top 5 institutional-grade staking service providers, Bitcoin Suisse, Figment, Kiln, Staked.us, and Stakefish, staked a total of 235,330 ETH combined, worth some $450 million, according to 21 Shares Dune dashboard. CoinDesk reported last week that the Shanghai upgrade boosted demand for ETH staking among institutional investors, including traditional finance firms. The increased interest also highlights that enabling withdrawals from Ethereum's proof-of-stake chain has significantly reduced the liquidity risk associated with locking up tokens, Yuan added in a separate tweet. Restaking rewards. Another likely catalyst for the record inflow has been investors choosing to reinvest their previously earned and withdrawn rewards from staking. Anders Helseth, vice president of digital asset market research firm K33 Research, explained in an emailed note. Through the first 8 days after the upgrade, investors withdrew some 900,000 ETH in staking rewards. Meanwhile, staking deposits totaled some 667,000 tokens, which was 6 times larger than the amount deposited during the last 8 days before allowing withdrawals. The dynamic indicates that investors decided to restake a large part of the withdrawn rewards, Helseth wrote. Reduce selling pressure. The Shanghai upgrade was a net positive in terms of total staking inflows. Noel Atchison, a market analyst and former head of research at Genesis Trading and CoinDesk, both subsidiaries of Digital Currency Group, wrote in a newsletter Monday, "So far, the rhythm of new deposits has exceeded the amount leaving the network, if rewards can be excluded," she said. The reason for differentiating reward withdrawals from full exits comes from how Ethereum's staking system works. Individual stakers or staking services have to lock up exactly 32 ETH to open a node and earn rewards for securing the network. Keeping the accrued rewards in the validator node does not improve the node's return. Atchison explained that it's logical for stakers to withdraw rewards, bundle the tokens, and establish new nodes to increase potential returns. "It seems this is what is happening," she said. "Overall net inflow has been positive, which suggests that a significant portion of these rewards are being restaked." The trend of reinvesting rewards is also potentially a positive sign for ETH price, as it reduces sell pressure, according to Atchison, which is likely to end up being much less than many feared. Bitcoin drops to $27.3 thousand, Ether edges toward $1.8 thousand, amid investors' interest rate concerns. BTC's recent price drop can be interpreted as a period of consolidation and a healthy correction, after an explosive move upwards, past $30,000 over the last several months, one analyst says. Bitcoin, BTC, continued its recent consolidation below $28,000 on Monday. The largest cryptocurrency by market capitalization was recently trading at around $27,350, down 0.4% in the past 24 hours, according to CoinDesk data. BTC dropped below $28,000 on Friday afternoon, part of a 2-day slide that followed a week above $30,000. At one point, Bitcoin was changing hands near $27,100. Sam Callahan, an analyst at Bitcoin financial services firm Swan Bitcoin, told CoinDesk that BTC's recent price drop can be interpreted as a period of consolidation and a healthy correction after an explosive move upwards past $30,000 over the last several months. Market participants seem to be exercising some caution in light of the heightened probability of the Federal Reserve maintaining interest rates higher for longer, as well as several economic metrics signaling weakness in the economy, Callahan said. Investors are eyeing next week's Federal Open Market Committee, FOMC meeting. The CME FedWatch tool currently shows a 91% probability of the U.S. Central Bank raising interest rates 25 basis points, BPS. Nevertheless, Bitcoin's value proposition as an asset without counterparty risk has never been more compelling amid the turmoil recently experienced in the banking sector, and the price reflects that, Callahan added. Ether, ETH, the second largest cryptocurrency by market value, was changing hands around $1,833 on Monday, down 0.8% from Sunday, same time. Over the past week, BTC and ETH have sunk 7% and 11% respectively, as investors mulled over industry and macroeconomic uncertainties, including a drop in US dollar liquidity. The CoinDesk Market Index, CMI, which measures overall crypto market performance, was recently almost flat for the day and down 9.3% for the week. Crypto data firm Kaiko noted in a Monday report that despite the recent price drop, the BTC to gold ratio continued to head north last week, with 1 BTC equaling 14.7 ounces of gold in early April, up from 9 ounces at the beginning of the year. A rising ratio means that BTC is outperforming safe haven gold despite the ongoing macro uncertainty and is a bullish signal, Kaiko said, adding the ratio, which had previously fallen to its lowest level when the FTX exchange collapsed in November, rebounded this year. Equities were trading mixed Monday afternoon, with the S&P 500 almost flat, and the tech-heavy Nasdaq Composite sliding 0.3%. The Dow Jones Industrial Average, DJIA, was up 0.1% for the day. In bond markets, the yields on both 2-year and 10-year Treasury notes fell to 4.14% and 3.51% respectively. House Republicans make case on stablecoin bill. After Democrats called for do-over, their latest draft legislation sets up shared federal and state oversight and says stablecoins aren't securities, but it's uncertain what bipartisan support the effort will find. Republicans on the House Financial Services Committee are taking another swing at stablecoin legislation with a discussion draft revealed Monday afternoon, which may mark a new starting point for negotiations with Democrats. The bill, the second legislative concept published in as many weeks, would create a definition of payment stablecoins, specifying what types of entities could issue them, and define how these companies should handle reserves. Unlike a previous version of the bill, which was published on the committee's website ahead of a hearing on stablecoins last week, the new version leaves out algorithmic stablecoins, although it does repeat clauses stating that an issuer can either be a subsidiary of a federally insured depository institution or a state or federally regulated non-bank company. The draft bill also makes clear that stablecoins must be fully backed by safe reserves that are subject to monthly reviews by registered accountants, which would eliminate the possibility of math-backed stablecoins being able to comply. It also declares that stablecoins are not securities, settling a controversial point in the ongoing debate over whether tokens are securities or commodities, which decides which agency will oversee their trading: the Securities and Exchange Commission, SEC, or the Commodity Futures Trading Commission. The SEC had recently warned stablecoin issuer Paxos that it may face an enforcement action, asserting Binance USD is an unregistered security. It's unlikely this bill will have the immediate bipartisan support it needs to become a law. During last week's hearing, Representative Maxine Waters, D. Calif, the senior-most Democrat on the committee, said the legislative body should be starting from scratch. She expressed frustration the Republicans had gone ahead and worked on this draft without Democratic input. A senior Republican staff member said a copy of this draft was provided to Waters' staff, and the Republicans hope it'll start a new negotiation. Senator Sherrod Brown, D. Ohio, who chairs the Senate Banking Committee, has not committed to any action on stablecoin legislation, only saying through a spokesperson that he would look at the different efforts being put together. Any stablecoin bill will also have to pass through his committee. One of the most hotly debated points of the legislation since last year has been how much authority is given to the federal and state regulators. This version would make a lane for state-based licensing for issuers and maintain the state's enforcement powers. But it also provides that an enforcement disagreement could be overruled by the Federal Reserve. In addition, the proposed legislation would put issuers' chief executives on the hook for putting out faulty information on a stablecoin's reserves, calling for them to sign off on the monthly numbers and making them criminally liable if the reports are known to be false. Representative Patrick McHenry's RNC Financial Services Committee is separately working on legislation to regulate market structure in the crypto sector, the staffer said, and that bill is expected to address key industry questions about which agencies will have what roles overseeing digital assets. One of the panel's subcommittees scheduled a hearing on the topic for Thursday, April 27th.